Okay, well, we are live. Okay,
Sweet.
welcome everybody to Wall Street Reporter's Smart Money Live Chat. Today we have with us Will Hershey. He's the CEO of Roundhill Investments, and they're the sponsor of the Nerd and BETZ ETFs. That's the Roundhill Sports Betting and iGaming ETF, BETZ, and the Roundhill eSports and Digital Entertainment ETF. Big names here, long names. Nerd. That's I'll just stick with the tickers here.
Nerd and BETZ works well. No, thanks for having me.
Absolutely. So, one of the things that we really want to get into is kind of the audience questions. We'll jump into that in a few minutes. Anybody that's got questions is gonna pop them up on the screen. Will, I think you froze for a sec. I think your computer's frozen.
Yeah, there we go. I can hear you.
Okay, yeah, we froze up for a second. So this is the beauty of live.
Exactly.
and you know all about this digital entertainment. So my first question really is like, what made you decide to launch these two ETFs, these two themes, sports betting, esports? How did you get into this?
Yeah, so a little bit of background on myself. I was actually working for a boutique ETF issuer. I think a lot of people, when they think ETFs, think Vanguard, think iShares, think the big players that control trillions of dollars. Back in 2011, I was with a boutique ETF issuer focused on energy. And we were successful in raising $400 million in those two funds, kind of being niche experts in a very different space in energy, where it was back in 11 through 14 versus where it is now, but had success in kind of becoming experts and selling an ETF that way. And Roundhill is a startup RIA and startup ETF sponsor. We really just launched our first fund, the eSports fund, focused in June of last year. But really what we're going to do with all of our future funds, as well as what we've done for Nerd, the eSports fund, and BETZ, the online betting fund, is we want to really try and identify secular trends in the market that we can put together a basket that really provides diversified exposure. And I think what you typically have in growth areas of the market are risks that come with investing in singular companies. If we can kind of diversify that risk, but still provide people exposure to kind of the long-term trends that are going on in each of these themes, we think we can provide real value to investors. And on top of that, what we're doing with both these funds is not only investing the underlying basket, the underlying components aren't only US listed, but we can also invest globally as well. And that's really what we're going to always try and do, is find themes that are hopefully working in terms of shorter term catalysts, but also long-term trends that are kind of capturing changes in the way the world works.
It's interesting you said that, because a lot of the names in your in your ETFs are, some of the most exciting names, like in sports betting, are trading on the LSE in Sweden or Australia. A lot of the big names are international, so it's kind of easier for investors to gain access through the ETF if they want a lot of exposure.
No, absolutely. And you kind of allude to an interesting point, which is I think a lot of people may have missed the run-up in DraftKings or the run-up in Penn, but are looking for a way to still play the theme and get exposure there as well. Our fund, in terms of BETZ, offers that. But also, it's really interesting, sports betting in particular, less so in gaming and esports, but in sports betting, you have such a hype and excitement and demand from US investors, which has resulted in the US listed companies, I won't name names, but are trading at pretty fancy valuations compared to some of the guys who have been doing this for 10 years over in that are listed in Sweden or in the UK. And it ends up creating an interesting basket of companies that are maybe more value-ish type names and then growth names. And that's kind of the beauty of kind of investing across the theme. We're not focused on trying to be a growth investor or a value investor. Instead, we're saying, here are the companies that provide you exposure to sports betting in the case of BETZ.
So you have these two ETFs. In a way, to me, I think they're kind of almost correlated, because they kind of are riding on one of the big themes, or the big trends, the secular trends. But they're really different. But let's kind of start off with talking about the sports betting and iGaming ETF, which is BETZ, BETZ, great ticker. So let's talk about that. The sports betting is like, all of a sudden it's incredibly hot in the in the U.S. at least. Even though live sports was up until whatever. So what's kind of driving the interest in that sector right now? What's the dominant trend right now?
Yep. So we've got two kind of things at play here that we really pay attention to. The first is the longer term trend, which is a shift in the world of gambling as a whole, from physical brick and mortar, going to a casino, going to a sports book, placing bets in person, to taking place online. When we look at gambling, it's the largest form of entertainment globally. You're talking about $500 billion in gross gaming revenues. Roughly 10 to 15% of that is taking place online. We think there's certainly a place in the world for going to Vegas, sitting at a table. Nothing can replicate that digitally. But we think that digital, not only for sports betting, but really online casino, which is iGaming, is going to take market share over the coming decades. And I think that's going to take place not only in the US, but globally. And we really want to provide exposure to that trend. So when you look at the companies we're invested in, a lot of them are forward thinking in terms of capturing this digital trend rather than running brick and mortar casinos. That's one, and that's kind of the longer term thesis for that sector. And then two is what you mentioned, and the reason for all of the excitement in the US is we only had the repeal of PASPA in 2018, which made sports betting legal on the federal level. And now you're starting to see state by state regulation and legalization. Nothing here in New York. I'm stuck playing daily fantasy on FanDuel. Hopefully we can get mobile betting here soon. But in the shorter run, you're now looking at coronavirus, which put a lot of these states at even worse budget deficits than what they had coming in. How many levers do they have to pull to bring in tax revenues? I think cannabis is potentially one, but that can be kind of a trickier issue in terms of getting everyone on board. Online betting, and then further online casino really seems like it makes a lot of sense. And just to tie this off, I view online casino, meaning online slots, online blackjack, online poker to a lesser degree, as the really long-term, exciting, money-making proposition for even the DraftKings of the world, because it's a much more recurring revenue business. It's much higher margin. And we're really getting to a point where we're gamifying sports. And really, it's all about gamification, right? If you wanted to tie our two themes together, it's about younger people they don't want to watch a baseball game unless they're betting on what the next pitch is.
Right. No, it's interesting because I think it's like the whole thing I think is being driven like by millennials because they've kind of short. I mean, that's kind of like you, right? You're sort of at right around the age group, right? Maybe older.
I'm 31.
Well, yeah. So you're like an elderly millennial, right? So that generation, they don't want to sit like look what's happened with like casinos, right? It used to be people would go to like watch shows, and now all the big money pre-corona was made by. I was talking to another gaming CEO was by the clubs. I mean, because people who are in their 20s, they don't want to watch a show. They want to participate. They're proactive. Exactly. They don't want to watch a baseball game. I mean, they want instant gratification. They want to.
You got it. No, that's exactly it. That's even millennials. Sure, we're guilty of that, but I think even more if you look at Gen Z, a generation that grew up on iPhones and iPads, right. They're what you bring up of instant gratification, wanting to feel like you, and social media as well, wanting to feel like you're involved in whatever it is. The ability to place $5 bet on a game and say, I'm watching, but I also have skin in the game, and this is more about me. It's kind of a broader generational thing. That's really why we're so excited.
Yeah, it is true. I didn't even think about that. That engagement, where they feel like they're part of. If they're making a bet, that's they're like a participant, basically.
Exactly.
So that's interesting. Now, one thing you mentioned, which kind of I think was interesting. You said that the iGaming, the casino, those things are going to be the real revenue driver for companies like DraftKings, etc. It's not going to be the sports business.
So I think what we've seen is initially for DraftKings or FanDuel, which is owned by Flutter, which is also in the ETF. Originally, it was daily fantasy sports, and the game there really was get users in with daily fantasy sports and then convert them into paying users on sports betting. I think what's really going to happen is the sports book is going to now serve what the purpose that daily fantasy did and bring in users. But if you can convert users to online casino, the long-term value of that user is just that much greater. Given when you're talking about sports, making a bet on a line, the sports book is taking risk there, right? Like they're only as good as their ability to make lines are, and you're talking about on average somewhere between 5 and 7% of actually what's bet do they actually bring in. Now, when you look at traditional table casino games, you're getting upwards of 15, 20% in terms of what the casino can bring on. On top of that, traditionally, the female audience hasn't been as into sports betting as they are and into playing roulette or playing blackjack. And I think you're bringing in a whole nother audience. But the long-term story is I could see an environment where sports betting is really that kind of top of funnel to bring users on, and then you're really making a lot of your margin and your revenue from online casino, because it's just simply a much better and more stable business, very predictable. And even another interesting thing that's happening too is a company in the basket, Evolution Gaming, is actually, I think, trying to address one of the biggest concerns that users have on these platforms, which is, I don't know if you've ever played any kind of card game online, but it's hard to really trust the computer. The big next step here is really doing live dealers, so live streams like we're doing now, where live dealers are dealing your cards to you, so you feel like you're getting a fair shake in terms of the way the cards are dealt rather than online. That's kind of long.
This is I think these guys trade in Sweden, right?
Correct.
Okay. And so how are they going to do this? How are they going to like scale? Are they going to have 1,000, 100 dealers like on stand, like in a studio?
Yeah, I mean, I think that's a whole lot more scalable and a better business than doing everything that goes with running a casino. Because if you think about it, you only really need the dealers. You don't need the bouncers and the waiters and everything else. But yeah, and actually, Tillman Fertitta, I know he's talking his book when he goes on CNBC and talks about this, because he has a SPAC right now that's acquiring one of his own companies, Golden Nugget Online, which is an online iGaming and casino company. I think he said on CNBC that the long-term value of an online casino user is something like 7 times that of an online sports bettor. Just to kind of give you numbers here.
Okay, that's a huge number. Okay, it's a huge number. So let's, I want to kind of finish off. So in terms of the sports betting, like the key drivers for the U.S. and the U.S., is that going to be the biggest market at some point? I mean, like right now, you have how many states are legal? It's like 18.
Right now, it's always changing. It's somewhere around 20. Okay. You also have different states that some you can bet you can do sports betting in person. Some they've also allowed online, and then even fewer they've allowed this online casino. But I think what we're dealing with right now is it's very difficult to try and peg how big the U.S. sports betting market is. Now, that being said, what we're seeing right now, even during COVID, is sports betting numbers in almost every state just hit an all-time high. New Jersey just reported their biggest number ever, and they were actually the first state to kind of come online a couple of years ago. So I think when you're looking at it, even if you look at the street's estimates, it's measured in the tens of billions in revenues. But it's really difficult because what we're also doing in terms of regulating this market is we're bringing in tens, maybe hundreds of billions of dollars in black market and offshore bets. That's very difficult to quantify. Right. When you look at kind of, I think the U.S. market will be the biggest. This is all to say that it will be the biggest. But right now you're looking at Australia and UK kind of being the leaders.
Okay. I think one other thing I think I saw an article you wrote where you mentioned the that move of the that these esports guys, I mean not the esports, the sports betting guys, they're going to make their money in the iGaming. It's all going to be almost like the discount brokerage model where the commission business disappeared. Nobody has free trades, and they make their money on everything else, basically. Yeah,
so no, that's kind of what I was talking about earlier. But basically, typically now, if anyone's watching has placed a bet, you'll bet $110 to win 100. And if they can make decent lines, the sportsbook will profit that way. I think we're going to get to a point where, similar to discount brokerage, where commissions go to zero, I think sports betting could get to the point where instead of being 110 to win 100, it's now 100 to win 100. And that becomes almost a quote unquote loss leader for these platforms. if they can then kind of similar to what the brokerages do, which is they sell the order flow, sell the data, or they try and profit off of options. I think you can get the kind of vanilla betting of sports betting to be zero vig, quote unquote, and then monetize through parlays, future bets where you're betting on who's going to win next year's Stanley Cup. And I think it's really then all about how many users can you get on your platform. And if we're really talking about like where this could potentially go, one of the most exciting things to me is live in-game betting. Whoever can, people are going to figure it out better than what it currently exists. But if you're watching an NFL game and you can bet on whether the next play is going to be a play action or a run or a pass, or whether the next pitch is going to be a fastball or a curve, now we're talking about totally gamifying and coming back to our earlier thing, feeling like you're super involved in watching a game. That's like the holy grail. And then take that even beyond sports for a second. What if you could bet on how many times Trump is going to say XYZ during a debate? I mean, that's where you start to get into these really uber bull cases of how big these companies' addressable market is.
It's going to be huge.
There you go.
So wow, this is very exciting. Now, it's kind of, but at the same time, there's almost a convergence of the esports thing now, because I think I saw in one of the recent conference calls who said it was I think it was one of these guys said that he expects betting on esports is going to be the next big category. It might be even bigger than sports, and I think esports, there's a lot of female players, so that brings in that they would be bettors on esports versus sports, which is a smaller percentage.
There's definitely potential there. I think you're growing from a really small base. But no, I think it was Jason Robbins, the CEO of DraftKings, that highlighted that esports was a really big winner for them during COVID, because they had the ability to play the competitive video games online when virtually every other sport was shut down. We also saw betting on European table tennis take off, which I think highlights that bettors are going to find ways to bet. But esports definitely has potential in terms of the way the betting market could grow. I think ultimately it's going to continue to be somewhat regional. So when you look at the esports market and who's really watching people play video games, a ton of it's in Korea, a ton of it's in China, a lot of it's in Europe as well. The US kind of has to catch up in terms of mainstream pop culture and acceptance of competitive gaming, but I think that's just a matter of taking time, right? Like we talked about kids who are growing up on iPhones and iPads, they're also growing up playing Fortnite and having that be the social environment for them and their friends. I do think there'll be a time and a place where some shape or form of competitive gaming is really a big part of what we think of when we say sports.
Okay, so to kind of finish off with the sports, with your sports betting ETF, let's kind of talk about some of the one thing we forgot to mention was the taxes, the U.S. The need for taxation. Mm-hmm. States, I mean, the Corona thing, they're going to be desperate for tax revenues. This is like such an easy thing, This is to legalize sports betting. It's going to be tremendous for them. So let's talk. What are some of the names in the BETZ ETF? What are the key names that you have?
Sure, I'll just rattle off a couple. Really, the way that we've weighted the portfolio, we're looking at companies that operate these B2C, business to consumer sports books as kind of the most interesting plays. So just a few. PointsBet, which is an Australian bookmaker that has a pretty unique kind of points betting technology where they allow for I would almost call it like what leverage is for a brokerage. Penn National, I think, is one that everyone wants to talk about now, given what they did with the purchase of Barstool Sports and Dave Portnoy. I think that's a really interesting one, because what you're looking at there is a kind of old school brick and mortar casino operator that's operating in dozens of states throughout the US, makes an acquisition in Barstool Sports, and now is going fully into this shift into mobile betting. And kind of important to highlight that having the physical presence not only allows you to cross-sell and potentially bring people in back when things get back to normal, but also puts you in a regulatory advantage standpoint. When new states get online, the first parties they're going to look to provide online licenses to are going to be the guys who have already been operating physical presences. One last company I'd highlight, DraftKings is in there, of course. I think a lot of people are familiar with DraftKings, and I think they're probably one of the leaders in terms of this kind of Robin Hood-like model approach to sports betting. And then just to give someone an example of a kind of a non-sports book that's in there, a company called Kambi. These guys provide the back-end technology for the online sports betting platforms, whether it's spreads or lines or just the way for them to actually build their app, all comes from Kambi, and they operate the back end. So they're really an interesting company, and there are others like it. GAN is another one which recently listed in the US. These companies are really kind of the picks and shovels of the sports betting industry, right? You're not betting on whether it's going to be FanDuel, which is Flutter, or DraftKings, or PointsBet, or William Hill. You're just saying, I want to own the kind of play that's going to grow as the industry grows and as revenues grow, whichever player it is.
Okay, no, that's and how many? Okay, so what's the criteria for inclusion in the ETF?
Yeah, so we have a pretty unique methodology where really we're screening all public companies for keywords that we've determined relevant. So sports betting, sports book, iGaming, online casino, and that frames a universe. And then from there, we're identifying which companies are really pure play to the theme. So an example of a pure play would be a DraftKings, all the way down through core and non-core. And we're weighting the companies based on how exposed they are to the theme. And the goal is, you can imagine, an ETF that is, focused on, I don't know, autonomous driving, but has Google as the top holding because they're big in autonomous driving. Great. But are you really getting the beta exposure that you wanted? I'm not so sure. And really, that's kind of our approach is let's find the companies that are really exposed, but we're not making fundamental picks, right? We're not analyzing fundamental metrics to determine which companies go into the index.
Okay. Does it go by, is market cap or exchange, a listing a factor, or no? Because there's companies on the OTC market with, smaller cap, or, are they out of the ETF, or would you include them?
We could include them if they got large enough from a market cap standpoint. I think our methodology explicitly states 50 million as the absolute minimum USD. We're also typically looking for a few $100,000 in terms of dollar value traded. But really at the end of the day, we also reweight the index to kind of make it very scalable, right? So the ETF's grown to about 150 million in assets in about 4 months here. When we're constructing an index, an OTC name, would just by nature of having a product that scales be a very small weight if in fact it would go in. But no, we're agnostic in terms of what exchange companies trade on. Really, it's, are they liquid enough? Are they big enough? And are they really exposed?
Okay. I kind of want to jump back. We're going back. The Penn National Barstool deal, which was actually kind of interesting because, essentially they bought, that company, Barstool was a media company essentially, right?
Yeah.
So they're buying it just for lead generation branding, and that's created tremendous value for the whole stock. As from this eSports play. This sports betting play. I keep getting mixed, and to me they're almost the same in a way.
No, it's pretty amazing. I wrote a piece about this, but they invested $160 million into Barstool for a pretty big stake. I think it was 36%. And it changed the story of Penn National stock completely overnight. It brought a ton of awareness. And you're absolutely right. So Barstool, through and through, is a media company. And what we're seeing now in sports betting, it's not just Penn buying into Barstool, but there's tons of media partnerships that are taking place. So PointsBet has a deal with NBC. DraftKings with ESPN now, William Hill with CBS. The whole concept is, can I find a partnership or make an investment to really do exactly what you said, lead generation? Historically, it had been kind of affiliate marketing and kind of different tactics to get users onto your platform. Now that things are regulated on a federal level, what we're going to also see is when you're watching sports on NBC networks, you're going to see PointsBet spreads directly on the broadcast. You're going to see DraftKings directly on ESPN. This is all starting to come into play. The Barstool investment was a similar story, except for really what they did. They made a one-time investment. They have the ability to increase it and take a larger stake, but they're saying Barstool can be our customer acquisition, and if they can do it as close to zero as possible because they have rabid fan base, 18 to 35. That's going to put us in a really good position longer term.
Okay. I think one thing, I don't know if you mentioned this, is that, with all these media companies, if they once they start, really getting into the sports betting, showing the spreads and all that, what's happening with the whole kind of digital transformation of sports betting, is it's kind of taken away that stigma of, the bookies, the OTB. I don't know. Do they still have OTB? The horse racing.
Oh yeah,
Those parlay.
they still have them.
I mean, there's like, it kind of makes it very, it really opens up to a whole new market, a whole new demographic. This is kind of the big.
Yeah, I mean, I think you could probably say the same for cannabis or any industry that goes from being totally black market, unregulated, maybe intimidating to people, to something that's regulated and feels safe, and there's proper consumer protections in place, and if you win a bet, you're going to get paid. All of that stuff. I think you're absolutely right. I think that that brings in maybe new bettors that weren't comfortable with the old model of finding a bookie and doing things really illegally.
So okay, so in terms of sports betting, like what's your outlook for, let's call it, next 12, 18 months? What do you see as like big themes emerging? What's the big trends, the opportunities you see for the companies, like, and the companies that you think are maybe best positioned? If you can talk about that, in your opinion, best positioned kind of to capitalize on these trends.
Sure. So I think what we're going to get, the most interesting thing is I think we're going to have catalysts. I think we're going to get several more states here in the next couple months that regulate online betting. Tennessee is one, Washington State, a few more of the kind of middling type states, and that's going to be beneficial to everyone. I don't think that there's certain players that maybe benefit there, but kind of over the next 12 months, I think you have the opportunity for larger states as well, New York potentially, and really the bigger shoe to drop really would be regulating this online casino, this iGaming market. When you look at who the players are in iGaming that are kind of pure plays on iGaming, you look at Golden Nugget, which is going public via SPAC with Lancadia. You have Rush Street, which is going public via SPAC again with DMYT. Those are interesting ways to play that market. But I really think also important to kind of pay attention to the European players that are making their way into the US market. As I mentioned kind of earlier, I think that they trade at much more reasonable valuations, let's say, relative to their US peers. So I look at William Hill, which is actually in the process of being bought by Caesars, as a company that a lot of people are interested in, and kind of they have a pretty strong presence in the US build out. Kindred is another one I'd look at through Unibet that potentially can be part of the US growth story while also having a kind of sustainable, and most importantly, these companies in Europe, profitable businesses in Europe. I think a lot of people say, look at DraftKings and because they're spending so much on sales and marketing, are they ever going to turn a profit? Look overseas. These companies have figured out how to make these into very profitable businesses.
Yeah, and they've been at it for a while. I mean, so they're relatively kind of mature models. So what's interesting is that you have this. What's happening with this kind of like M&A activity, like what you see with the Penn Barstool deal, is like you have this like crossover now that you bring in this the iGaming, the casino. So there's a lot of interesting things that could be happening from an M&A standpoint in the next 12 months. From like it's all just kind of merging, transforming.
No, we've seen a lot of M&A already, actually. So you had Caesars and Eldorado, which are two of the bigger land-based casino operators, merge earlier this year. You have Evolution, which is buying NetEnt, which is two iGaming companies in Sweden merging. I think there's going to continue to be potentially consolidation because we're in this growth mode right now where it's all about customer acquisition. I don't need to be profitable. We're talking about the US market now. You don't need to be profitable tomorrow. Investors aren't expecting you to. It's all about kind of growth and where that could come. Eventually, we're going to get to the point where investors are going to look for profitability. And I think what you just naturally get then is some consolidation within the industry. And then kind of on top of that, I think that someone like a DraftKings who just raised over the past couple of months in secondaries, they raised $1.5 billion. Could they look to be acquisitive there? Why not? I think that we're definitely at a spot where we'll see more acquisitions. What I'd also highlight is that NBC PointsBet deal. So In the Penn Barstool case, you had the casino operator buying the media company. In NBC PointsBet, NBC, I don't know if people know this, NBC actually took a 4.9% stake in PointsBet that they can increase up to 25%. Now you're talking about mainstream media, sports media companies potentially taking big stakes and becoming regulated gaming operators themselves. I think that, depending on how this rollout goes, that's something that could happen too.
Okay, no, it's very interesting. But right now, what is it? DraftKings and I think FanDuel, right? They have like 65% of the market for sports betting right now in the US.
They do. And I think that's gonna come down over time. I think if you look at the European market, which is a very mature market, it's much more fragmented. You have a handful of players that are all over 10%. And I think it'll be different on a state-by-state basis because the regulatory environment in each state is really different. If you look at Illinois as an example, I think Rush Street actually has the biggest market share in that state. So I think that DraftKings and FanDuel are going to be the mass market players. There's no question. They're going to have decent share, but they're going to be a lot of players that kind of come out of the woodwork here.
Okay. Oh, so that's interesting. Okay, so there's going to be there. So it could be that within a few years, the U.S. market could look like the European market, which has numerous players. It's much more fragmented. Then it's not just dominated.
I think so. And I think it'll take more than probably a few years. We're probably looking at like 5 to 10 before we get to that mature, steady state where everyone has their kind of part of the pie. But I also think that's probably a result of how these companies are going to brand themselves and differentiate one another, right? Penn and Barstool doing the Barstool app, they're going after a much younger audience. DraftKings is going after mass market. Like I mentioned earlier, PointsBet is going at, has some sophisticated betting options in their platform. That's almost like maybe what Interactive Brokers is versus Robinhood, if you want to make the analogy for trading platforms. I think there'll be different hooks that different platforms have to bring people on, and people will love them for that or they won't, and that'll be kind of how the market shakes out. It's not all just throw a ton of money on advertising and you win.
Right. Okay. So that's a good point. So if somebody wants exposure to that, BETZ bets is the way to bet on sports betting. Let's talk about the eSports. That's kind of a fascinating market. Every time I talk about eSports, I'm kind of blown away by the fact that there's guys who are basically making money playing video games, like in their basement, essentially. They're making like $10 million a year or something.
Oh no, absolutely. I mean, I think the top guys are making $10-20 million a year. What's interesting though is, and we take a broader view of esports, we kind of view anyone that's playing or live streaming or playing games competitively as esports for us. But a lot of the guys and girls who are making the most money aren't even necessarily the best players at their games. In many cases, they're just the most entertaining and fun to watch on a stream like this where they're playing games. But you're absolutely right. It's a very big market. Globally, you're talking about 400+ million people worldwide that watch people play. In terms of people that game, it's over 2 billion. In terms of people that watch people play games, it's 400 million.
That's the thing that I don't understand. I don't understand the thing about people watching, somebody playing a video game. I mean, why? To me, that's probably why this is kind of that convergence with sports betting, because now that they're watching it, they're going to start betting on it.
I guess that's the natural progression. But I think to kind of explain it, it's like if your kids grew up, instead of playing baseball, it was playing Fortnite. Like, wouldn't you want that? Just naturally, you'd want to see the best people play and what they do and how they do it. And you'd understand. I think what's really important is in gaming in particular, because we've all grew up to know traditional sports and what they look like and what to watch for. It's really important that you're a player first before you can watch, I think, in a lot of cases, right? Like if we put cricket on, I wouldn't know what was going on and I wouldn't be interested. But if I had played cricket for years, maybe I would. And I think that's kind of the progression, is from player to then watching. But no, it's a massive market. More people watch gaming and esports than Netflix, ESPN, Hulu, and HBO combined.
I saw this number and I was like, wow, it's just that thing. That blew me away. I thought it would be like a niche thing, but it's a huge thing. And again, like you mentioned before, people are actually paying. These people who they're not even great players. They're just entertaining. They're getting paid. People are paying to watch them.
Yeah, so people will it's typically free to watch, but they'll give donations.
Donations.
Or they'll subscribe to their stream that you pay a little bit for. And different in different parts of the world. But so you have those, which are the streamers, the content creators, the personalities. And then what you have is esports that really looks like traditional sports, where pre-COVID we were filling up arenas for Counter-Strike tournaments or League of Legends. And that's really starting to kind of take hold, where that looks like professional sports, right? That is the top players in given games, and those guys are signed to pretty big contracts as well. So we don't know exactly how much they all make. It's not like the NFL where we can go look up what the salaries are, but the top guys are getting paid several $1 million a year for those games.
I think there's a couple of professional, guys who own professional sports teams. But who Bob Kraft is an investor in esports?
Bob Kraft owns an Overwatch League team, which is Activision Blizzard's franchise league. Jeff Wilpon of the Mets, or I guess the Mets currently, soon not to be. There's several guys who own traditional sports teams who have invested into esports. I think they kind of see it, one, as a hedge. What happens if this takes away share? But two, I think they believe in it long term, right? Like, you just look at the growth of the gaming industry. And to give you an idea, gaming, obviously esports is tied at the hip to how gaming grows. Gaming's a $150 billion a year market right now. And it's not only pre-COVID growing high single digits, low double digits. Now you have an acceleration where, you have people that maybe were on the fence that went ahead and bought the Xbox or started to play some games. And it's just accelerating the existing trend that was taking place. Younger people, and younger than me, I mean, right? Like Gen Z loves playing video games, and that's just going to continue to grow.
Yeah, it's incredible. It's always, the video game. It keeps just growing. I remember, in my day it was like the Atari, right? That was the thing, and then, then it just grew. You don't know what the Atari is, probably.
I know what it is. I've never played it, but I know what it is.
Man, so let's talk about the ETF. So BITKRAFT eSports digital entertainment ETF. So you include eSports and digital entertainment. What's kind of the difference? How would you say is the two?
Yeah, I think eSports is very particularly going after this concept of competitive gaming, social gaming, and digital entertainment is just the broader umbrella term to capture everything that kind of falls under, like, outside of that, but is related as well. In terms of the types of companies that we hold in the basket, falls into four main categories. The first are the game publishers. So who's making the games that are being played competitively and socially? That's one. Two are the hardware manufacturers. So who's making the headsets or the keyboards or the mice or the PCs that the pros and the streamers and the content creators are using? Really interesting segment right now, especially during COVID, because you've got a whole sales cycle pulled forward. Then you've got the media companies. So these companies might own a streaming platform. So, in the US, all the big streaming platforms are owned by big tech. So, YouTube is owned by Google, Twitch is owned by Amazon, but in China and Korea, these are independent companies that we hold in there. You've also got companies that organize and operate esports professional leagues. And then the last grouping are kind of what we call broad-based companies that are bigger in market cap, that have a part of their business tied to esports. That's a Tencent, that's a C Limited, which a lot of people have that's kind of a Wall Street darling right now. SE, you got it. So those are kind of what
it's been a stealth bull market stock, this C Limited. Nobody can figure it out. So let's talk. So what are some of the big names that you have? So you mentioned C, but what are some of the names that you have in the ETF? The most exciting ones?
I think one of the most exciting. They're actually two of the most exciting are going through a merger right now. One's called Huya, the other's called Douyu. Both trade. They're Chinese companies, but their ADRs both trade, one on the Nasdaq, one on the NYSE. And really what these companies do is they are like Twitch, which if you haven't, I recommend anyone watching goes to, twitch.tv to see what this is all about. But really these are the platforms where people watch other people play. And between the two of them, they just announced a merger. Between the two of them, they control the large majority of the Chinese game streaming market, which is 5 times the size of the U.S.
Wow.
I think Huya and Douyu each have about 150 million monthly active users. So it's a lot of people per month that are logging onto these platforms. But really what they're providing is exposure to this concept of more and more people watching people play games without being dependent on what's the flavor of the month in terms of which game is hot. I think that we have seen a shift in the games industry. So if you look at the game publishers, Activision, Blizzard, Take-Two, EA, which are to varying degrees involved in esports and game streaming, they're interesting as well on the fact that you mentioned this with your Atari. The games industry used to be you buy a game, you bring it home, and you play it with your brother or sister, and that's all the revenue that the games company gets. They get a one-time, payment from you of $60, and that's it. Now what's happening is because games are able to be updated and delivered digitally, the model has really shifted, and it's kind of what the industry calls games as a service. But really, you have games that are sometimes even free to play, but are monetized within the game continually, and it ends up resulting in a much more recurring revenue model than this whole hit-driven model that used to be very similar to blockbuster movies, where it would take you several years to build a game, you put it out and hope that a ton of people bought it, and that was it until you were on to the next one. Now it's all continually monetized and delivered digitally. Like if I wanted to like make an update to a game and add a new part of the map, it's all done now via download. And if you can monetize that, it can become a really powerful full business model.
So you mentioned this kind of recurring revenues from inside the game. So like how much could a have you seen these numbers? Like what can a typical game generate now from that versus recurring revenues versus a one-time sale? Like how much can they get from this?
Yeah, so the biggest games in the world right now are free to play. Anyone can play them. You can download them right now. They don't cost a thing. At the same time, some of those games are doing upwards of $1 billion. The very top ones, upwards of $1 billion a year in revenues. So League of Legends does more than $1 billion a year in revenues, even though it's free to play. Now, the only way you can get there to that level is if you have tons and tons of users, right? And you can monetize a fraction of them, because most people will never end up paying. You can monetize a fraction of them by them purchasing in-game items. So that could be a new outfit for your character. If it's Fortnite, it could be a new dance. All of these things that don't change the game, but just make it personalized. And it's incredible the way that this has been able to take place. But another example that people probably have heard of even better is Grand Theft Auto. So Grand Theft Auto 5 was released in 2013 for Take-Two Interactive, which is a public company. They're still monetizing that game by delivering content online to the tune of several $100 million per year, 7 years later. And when you think about how powerful that can be from a business model standpoint and how valuable that intellectual property of owning that Grand Theft Auto series becomes, the game publishers are really kind of in an interesting spot where the industry has shifted over the last 5, 10, 15 years.
Okay, so you talked about the publishers. What other give some other names, like if somebody wants to get involved in the esports space. Are there any these leagues or any of these guys publicly traded? Like any other interesting aspects?
Modern Times Group, which is a Swedish company, is really kind of the only public pure play on esports leagues. So they operate ESL, which is the Electronic Sports League, which is one of the first ever kind of real organized esports leagues. They also run DreamHack, which is a kind of a Coachella of gaming and esports. They're really a play on, I know that's a funny analogy, but they're really a play on probably the closest to getting on professional leagues and monetizing those leagues, which is a lot of the biggest part of that right now and is going to continue to be is media rights. So actually, all of the different pieces fall in here. So they have ESL Pro Tour for Counter-Strike. They go to YouTube or they go to Twitch or they go to one of these Chinese platforms and say, if you want access to broadcast this on your platform as an exclusive, we'll cut a deal with you, but we want multi-million-dollar per year contract. And interestingly, I think one of the biggest contracts was signed last year between Activision, Blizzard, and YouTube, where they basically, I think, paid about $115 million for 3 years for the Activision eSports League. So we're talking about big numbers now, just for the media. Yeah, it's like sports. It's like sports. It's like sports. And then one last group I'd point out that I think are really interesting, like right now, are the guys who make the hardware, the gaming peripherals. And Logitech reported earnings just last night that were some of the most incredible earnings I had seen in a long time, especially from a hardware company. Their margins were up 8%. They, I think, increased guidance. I think it was from 10 to 15% to something like 30 to 45.
Wow.
Or no, it was even more than that. I'm butchering it.
He's buying webcams.
They're buying so Logitech has webcams for the streamers, but they also make competitive mice, keyboards. They actually do driving steering wheels for gamers who are playing racing games as well. So I'd look at the hardware guys, because I think they're going through, they can be cyclical, just in terms of when new consoles and games come out. But for the hardware guys, so you've got Logitech, Corsair, Turtle Beach, Razer. These companies right now are going through two really interesting things. One is work from home. So some people are buying, gaming mice and PCs that they'll work with too. And that's temporary. But then you've also got Sony and Xbox who are releasing the PlayStation and the Microsoft and the Xbox. The new ones are coming out in a couple months here. When they do that, everyone has to refresh the hardware to make sure it's compatible with the new consoles. So the hardware guys are in a really interesting spot for exposure right now.
Okay, and how many names do you have in the nerd ETF?
So we just did a rebalance. I think it should be right around 30. And really, what we're doing there is we're providing exposure to companies all around the globe. So in terms of esports, very different in terms of which markets are most exciting compared to sports betting. In esports, China, South Korea, Taiwan, Hong Kong, a lot of the Asian markets are more developed relative to where we are. So we've got exposure kind of across the globe for investors there.
So I guess right now most of the action is in Asia for esports.
Yes, and we just got numbers. So for example, Overwatch just had their grand finals. They had a new record in terms of viewership, but I think it was reported that 90% of the viewership came from mainland China. And it is regional. So certain games will be more popular to watch in certain parts of the world. Same way with traditional sports. But right now, I'd say in terms of specific market, Korea is probably actually the furthest along. In Korea, you have kids that are growing up who say they want to be a pro gamer. And that's been going on for 10, 15 years. That's really where this all started.
Do the parents encourage it? Do they?
I think so. They don't. Well, look, Korea doesn't have the NFL, so if you can make $1 million playing StarCraft, go for it.
No, it's crazy. No, it's amazing. Okay, yeah. If we have any questions, I'm very surprised we don't have any audience questions. Usually we get a lot of questions, so maybe everybody's shy. So they'll probably answer them all. Yeah, the questions will probably pop in once the videos goes on YouTube. You'll probably see a lot of stuff. I want to ask you, one of the things that's fascinating, we kind of touched on it before, was the betting on esports. Do you have anything, any exposure there in the ETF, or is BETZ the way to go if you want that?
It's a great question. I think this could evolve over time. I think we'll probably see more companies come public that are focused on esports betting in particular. But for right now, I think BETZ is the way to play it, because as we mentioned earlier, DraftKings was easily able to introduce esports to their audience during the pandemic. I think that esports betting as it's on its own is probably going to be difficult to achieve. I think the guys who are probably best positioned to do that are the companies that have the traditional sports offering. They just add esports as an add-on rather than pure play. There is one company in the esports fund. It's actually in both of our funds, called Better Collective. That's kind of a play on esports betting and Counter-Strike betting through affiliate marketing.
Okay. We're getting a question here finally. Okay. Jeremy's asking the question: what differentiates nerd from ESPO and HERO? What makes nerd better?
Great question. really, when I think about how we construct the index for Nerd versus the other funds, what we're trying to do is capture this concept of esports and competitive gaming and social gaming, and really believe that that's kind of the most exciting part of the game market, not just investing in any kind of company that's involved in video gaming. And kind of when I look at some of the funds you just mentioned off the top of my head, I think really what we're doing is providing exposure to companies that are very much so pure play relative to those funds that you don't own elsewhere, right? Just off the top of my head, Nvidia and AMD. Are you investing in an esports and gaming fund for esports exposure, or do you want semiconductors? And I think what you're going to get with all of our funds is really very targeted pure play exposure to companies that, as the theme of esports grows, these companies stand to benefit.
Okay. Two last questions. What would you say the most interesting names inside the esports ETF right now?
So I mentioned Huya and Doyu, the game streamers.
But they're going to merge now.
They're going to merge. So they will be one company. But I think that they're very interesting, just in the sense that you're not making a bet on a single game. I also think you have to mention Tencent as one of the most interesting companies in the sector. They're a top 10 company in the world in terms of market cap, but a large portion of their revenues is directly related to esports and game streaming. And what I like to call them is they're almost a mini gaming ETF in and of themselves, because they've made so many investments into the space. They've invested into Epic Games, which is Fortnite. They've invested into Supercell. They've invested into these streaming platforms as well. They have investments in Ubisoft and Activision. If investors are looking for one name to kind of do what the ETF does, Tencent has its hand in gaming across the globe. And even though they're a Hong Kong listed company, a Chinese based company, they're really a play on global growth in esports and gaming. I also should mention, I don't know how I forgot it, they invested and own 100% of Riot Games, which is League of Legends, which is the biggest esport in the entire world. So Tencent's a really interesting one as well.
Okay. What do you see as like the big, what's going to be the dominant trend for esports, trends to watch, next 12 months?
Next 12 months, but I think it's also like next 10 years, is mobile gaming. And I think and mobile esports more specifically. I think a lot of people think of mobile games as Snake. If you played it on your Nokia, or Brick Breaker, you played it on your BlackBerry, these very simple games. What we've gotten now is two things that are really interesting. One, the ability to run really advanced games that are immersive, that feel like you're running it on a high-end gaming PC on your smartphone now has never been more possible, just because the hardware on an iPhone is so great. And then the other thing that's happening is you have emerging markets where the console penetration rate's really low, where they can't afford high-end gaming PCs. But in Southeast Asia and Latin America, they're all getting smartphones now, and as that continues to grow, that's going to be the primary way that these communities engage with esports and gaming. So mobile has a really interesting kind of growth trajectory to it.
In Southeast Asia, in these emerging markets, that's the main platform, is mobile. Like for SE, I think that's the big thing. We got questions that are coming out of the woodwork. You got a few minutes, Will? But we're running a little bit late. Let's jump in. Okay, here's an interesting question. So Mosul is asking, why doesn't an old school company like Wynn make a play like Penn? They have a great brand. I mean, they have a young demographic for their casinos.
No, I think it's a great question, and I don't have a great answer there. When you look at what MGM's done, they're trying to move into mobile and online betting with BetMGM. They're partnered with some personalities as well. I think actually they worked with Jamie Foxx. I don't think that's the right approach here. I think knowing kind of who your audience is and what Penn's done in Barstool is really brilliant. But no, I think all of these players should be looking to form media partnerships to kind of act as a top of funnel and lower customer acquisition costs. Now, what I will say is I think there's kind of only one Barstool in the world. I don't know how many other brands there are out there that can deliver the same kind of impact to a brick and mortar casino operator that Barstool did for Penn. But I would expect that when, similar to almost everyone else in the space, they will do some sort of media partnership to help get their brand in front of more potential bettors.
Okay, Jeremy's asking, do you expect upticks in video game stocks when the new game systems like Xbox, PlayStation are released? Is that baked in, or is that is there upside?
Yeah, that's the $1 trillion question every day. Is it priced in? I think that, I mean, these console refresh cycles are kind of projected years in advance. Everyone knows that they're coming, but what I do think that the third quarter that we're going to get reported in the next couple of weeks here for the video game publishers is going to be exceptionally strong. Like, if you just look at, you can't look at the same data everyone else is looking at, but if you look at the viewership numbers on Twitch, so how many people are watching, does that correlate to how many people are playing? Yeah, it kind of does, near all-time highs, and kind of bounced up in March, right when we had Corona, and now is coming back up. Same thing is true for the number of people playing on Steam. So you can actually go look, SteamDB, I think it is .com. You can see how many people are playing on Steam, which is a popular PC gaming platform. Does that give you an indication of how many people are playing beyond their platform? I think it's a pretty good read. And one of the funniest things is they have a chart on there of the number of people on their platform. And right when March and April hit, you used to see spikes during the weekend when people were gaming. I don't know what everyone watching is doing at home, but now it's like a flat line. Like, there's no difference between the work week and the weekend. But this is all to say, I don't know if that's going to be a catalyst. I do think, though, that we're in this golden era of more people playing games than ever before. How long it continues, I don't know. What I can say anecdotally, friends of mine, I'm 31, friends of mine who bought Xboxes and PlayStations for the first time in 10 years during this are probably going to be playing in a year, even if we're back to normal.
No, it's fascinating. So no, this really is kind of like a golden era for eSports, sports betting. A lot of things are kind of coming together. So last question is going to be, so Will, top 3 reasons that you would give investors why they should consider BETZ and Nerd for their portfolio.
Yeah, I think the first is, with any thematic equity product, these funds can offer you ways to play these sectors without making a single security bet. I think most people, unless you're professional, really should be diversifying where you can. I think that's one. 2, these are long-term trends, like we've talked about this whole call. These are sectors that just so happen to be benefiting from Corona, so they're going to work hopefully in the short term. But there's also a long-term trend of kind of generational behavior that we're tapping into here. And the third is, I think, really important, which is, despite certain companies that have run up a lot, when you look at these baskets as a whole, I think they're somewhat reasonably priced from a valuation standpoint. And there are a lot of companies in the basket on both sides that are generating significant profitability, especially on the gaming and esports side, like where I said, it's right now is kind of maybe the best couple quarters in a row that we're going to have seen in a long time, if not ever.
Wow. Okay. On that note, Will, I want to thank you. I thank you, everybody, for joining our live stream today. And we look forward to following up with you again, maybe the next couple of months.
Or when I've got my next ETF. Sounds great.
Oh, that's right. Yeah. Are you launching the next? We
haven't filed yet. We haven't filed yet.
Okay.
We're working on a couple.
It's going to be an exciting one, though, because you're kind of on these, cutting edge themes here.
We hope so.
Fantastic. Will, thank you again.
Thanks, Jack.